I've said this before and I'll say it again. Anytime Bitcoin drops below 100,000, you may want to decide to buy. You may want to decide to buy. If you decide, talk to a financial advisor. I am not a financial advisor. This is not financial advice, but consult with one to find out if you need crypto in your portfolio. Now, to make this easy for you, just set price alerts. Set price alerts below 100,000. You pick a price, look back at history, and see where it drops to. And you may want to scale your way into it. Let's say if it goes to 90,000, 80,000, 70,000, even set an alert for 50,000, just in case. You never know. But set alerts, 85,000. Who knows? That way, the hard part is already done. You don't have to constantly look at the market. It's already done. Now you just got to actually log into your account and make a purchase. And it's even easier now because they have Bitcoin ETFs. So now you can own crypto inside of your Roth IRA. Most importantly, inside of your Roth IRA. Now, if your Roth IRA is already maxed out for the year, then own it inside of a regular brokerage account. But preferably, for me, inside of a Roth IRA so it can grow tax-free. Tax-free. Okay? I've been doing this since 2017. That's where my crypto is at. Except for in 2017, I wasn't allowed to have it inside of my Roth IRA. I had to put it inside of a self-directed Roth IRA. Self-directed Roth IRA allows me to have other assets that I cannot have inside of my normal brokerage account. But the world is better now. The world is easier now. And it's easier for you. Okay? So, either you purchase the Bitcoin directly or purchase a Bitcoin ETF. In either way, you'll get the similar performance over time. Nothing's guaranteed. Past performance does not guarantee future results. You fuck with me, you may lose some money, okay? So, yeah, talk to a financial advisor. Just go and talk to one, okay? Go and talk to one. Or if you don't want to talk to one, do your own research. Do your own research so that you become comfortable in making the purchase. So that you know that if it goes to zero, you're okay. Because you came in with a certain amount of money you're willing to lose. You only have it as a small portion of your overall portfolio, a small portion of your net worth. So if it goes to zero, just like any company out there, companies can go bankrupt. Okay, companies can have a bad scandal and they drop like a rock, which is why you only want to focus on investing in profitable companies, large profitable companies that have a track record. Okay. Now, I'm not saying you cannot invest in companies that are not profitable, but you want to have those be a small portion of your portfolio also. So that if it was to go to zero, you'll be fine with that. But you're watching them, you're looking at their quarterly earnings and see that they're losing less and less money each quarter, which means you can see a trajectory of them becoming profitable, which means you are in ahead of the institutions. Institutions don't want to invest in companies that are not profitable. They're watching. They know on the inside, but they got money to manage for other people. Okay, so they want people. Most of them can't beat the market. Let's just put that out there. Most money managers cannot beat the market. All right, so your best bet is just be in the growth ETFs in your Roth IRA. That way, inside of that ETF, you got a bunch of companies spread out to lower your risk, and you don't really have to worry about too much. But it gives you options. It gives you options. So you got ETFs to invest in. You got individual stocks to invest in. You got crypto to invest in. Build you a nice portfolio. Try to get all of it inside of your Roth IRA so that it's tax free. Tax free. Okay? So back to my original message. Anytime Bitcoin drops below 100,000, you may want to decide it's time to buy. You may want to decide. But the key thing is set those alerts, set those alarms. Okay? Set them. Because that is half the battle right there. Because you don't have to watch the market and wonder what's going on. All of a sudden, you get an alert. Oh, okay. Half the battle's done. Half the battle is done. It's almost like you're, how can I say, your retirement plan at work. Whatever type of retirement plan you have, whether it's a 401k at work, whether it's a TSP, whether it's a 403b, whatever. You don't really have to worry about that. That's diversified. You have limited choices in your retirement plan at work. And it's designed like that to keep you safe. But with that retirement plan that you have at work, you want to make sure that it is invested in growth. Make sure that it is invested in growth because you want it to grow so that it can provide for you in your retirement. You don't want your retirement plan to be invested in safe stuff because it's gonna grow slowly like a fucking turtle. And it's not going to give you the type of retirement you deserve. You deserve. Keyword deserve. Okay? You put in a lot of years working at your employer. You want your employee-based retirement plan to pay you nicely. Nicely. Which means you need to invest nicely. And when you get 5 to 7 years away from needing your money, 5 to 7 years away from needing your money to live on, you start to dial back and get a little bit more conservative. Okay? So that in your retirement years, you don't have to watch the market. Okay? But even in your retirement years, you still want a portion of your funds in the stock market because you want some growth. Okay? But talk to a financial advisor, man. Don't be listening to motherfucker on the goddamn internet. Shit. Woo, Lordy. All right, y'all. Peace out.